What's going on, guys? Foresight Capital here. Today we're going to take a look at each of the ARK Invest ETFs and talk about whether any of them are actually a good investment. ARK Invest and Cathie Wood are almost household names in 2021 because in 2020 ARK Invest had multiple ETFs that returned over 100% while the S&P returned about 16%. So they definitely provided some outsized performance in the past. But a lot of the companies that they invest in are innovators within a fledgling industry that have a lot of risk behind them. So we're going to take a look at risk-adjusted returns to determine which ARK Invest ETF has actually been historically the best to invest in and whether any of them are actually a good investment versus just parking your money in something like SPY or the NASDAQ ETF. All that I ask is that if this video brings you value, share it with somebody, leave a like, and leave a comment down below on which of the funds is actually your favorite to invest in. So on YCharts here, I've actually pulled up the total return for each of the ARK Invest ETFs over the past 2 years, as well as the total return of the NASDAQ, the S&P 500, and the Russell 2000. And we can see here that there's a very big gap between even the worst performing ARK Invest ETF and the best performing market over that time. And in fact, the ARK F ETF is the worst performing, but also one of the newer ARK Invest ETFs, which means that it hasn't had time to really build up the high levels of returns that we've been able to see with an ETF like the ARK G ETF, which returned over 200% over the past couple of years, while the S&P returned about 50%. So obviously investing in any of the ARK Invest ETFs would have been a great investment if you're solely looking for return, but what you have to take into account is the level of risk that you were taking with any of the investments in the ARK Invest ETFs. And the easiest way to take a look at that is to take a look at their beta. So I've got a chart pulled up here of each of the ARK Invest ETFs and their overall beta. And the beta is going to show us the volatility in returns versus the market as a whole. So the market will have a beta of exactly 1.0 and a beta above 1, which each of the ARK Invest ETFs has, means that we're going to see much higher gains when the market is going up, as we've seen over the past couple of years, but that means we're also going to have much bigger losses when the market goes down. And if we have a sustained period in time where the market is consistently going down, you can have a very big drawdown with a high beta ETF. So the drawdown is simply the percentage that the stock has fallen from the highest of its height to the bottom of its trough. And we can see here that ARK-K has a very high beta of about 1.6, which means that on average when the market is up 1%, ARK-K is up about 1.6%. Conversely, when the market is down 1%, ARK-K is typically down about 1.6%. And back in March of 2020, when each of the ARK Invest ETFs was setting its highest drawdown, we saw ARK-K have a drawdown of 42.5%. Now we know that they've rebounded substantially since then as the entire market has been on a rise and the beta has come into play to the upside. But you have to keep in mind when you're investing in these stocks that we've been in a bull market for many consecutive years if you exclude March of 2020 and just look back over the past decade. So of course these stocks would have performed very well in the bull market. But as we reach potentially the end of a bull market, and of course nobody knows whether or not this is really the end of the bull market or we're going to see another decade of it, but you do have to keep in mind that when you're investing in high beta stocks or ETFs, you're going to potentially see much bigger drawdowns to the downside, and we have been in the bull market for quite some time. So overall, the lowest beta ETF in the ARK Invest suite of ETFs is ARK-Q, which still has a beta of about 1.4, and it also has the lowest drawdown, excluding ARK-F, which doesn't currently have a beta because of how new it is. So overall, you can see that you're getting a lot of volatility in the returns within the ARK Invest suite of ETFs. That's not bad, but what we're going to look at on the next chart is the Treynor ratio, which takes into account risk-adjusted returns, taking into effect the beta and your total returns over a certain time frame. Basically, the higher the number, the better the overall investment it was because you're getting a higher return on your risk. If we take a look at the ARK Invest suite of ETFs, we can see that even the worst performing ARK Invest ETF substantially beat out the S&P 500, the NASDAQ, and the Russell 2000 over the past couple of years, which means that any of them would have been a great investment. But the absolute best investment for ARK Invest over the past couple of years would have been putting your money in the ARK G ETF. it had the highest overall risk-adjusted return. And if we take a look back here, we can actually see that they had the highest overall return over the past couple of years, returning over 208% since the beginning of 2019. And if we take a look at the betas, ARKG isn't even the highest beta. It's the second highest beta, which means that you weren't getting as much variability in price as you were with an investment like ARKK, but you're still getting higher returns. And if we take a look back at the worst performing ARK Invest ETF, it still substantially beat out the NASDAQ over the past couple of years. That's the ARK Autonomous Technology ETF. And if we go back here, we can see that it had a return of about 157% over the past couple of years. And it doesn't even have the lowest overall beta. That actually belongs to ARKQ. So you're taking on more variability in your overall returns while still getting the lowest overall returns of any of the ARK Invest ETFs. So overall, this really shows that ARK Invest and Cathie Wood have been rock stars over the past couple of years because they've been able to provide outsized returns, even accounting for the risk that you're taking by investing in some of these small and more innovative companies. Now, of course, we've already talked about beta working really both ways, and we have been in a bull market, but when we do start to see the market pull back like we did back in March of 2020, these higher beta stocks will tend to go down a bit more and in a bit more rapid of a manner, which means that while the bull market is going on, ARK Invest is probably going to continue to provide outsized returns because they're able to get in on these very high growth potential stocks early on. But when the market starts to turn around and people start to rotate into more value investments, you're going to see a lot of these higher beta stocks pull back. Some of them may even disappear, and that could be a big drag on ARK Invest returns in the future. So really, this just goes to show that beta works both ways, but right now, ARKG has consistently been the best investment in the ARK Invest suite of ETFs, but any of them have actually been a great buy versus holding something like the NASDAQ, S&P 500, or Russell 2000 over the past couple of years. So as long as this bull market continues, I expect that to be the case where any of the ARK Invest ETFs are really good investments while we're seeing this bull market go on. But definitely let me know down in the comments which is actually your favorite ARK Invest ETF. We do have the ARK Invest Space Innovation ETF launching next week, so we could see some really nice returns from that in the beginning as it really brings some legitimacy to some of the stocks out there in that industry. So it'll be really interesting to see. I really appreciate you watching until the end, and if you're new here, don't forget to subscribe and check out the Discord, which is linked in the description below, where you can have more dynamic conversations with myself or other people that you've seen in the comments. Again, don't forget to share, like, and subscribe, and catch you in the next one.